This week on By the Numbers, here on our free segment on YouTube, join us as we talk about the Japanese carry trade and did it blow up in investors' faces. For now, sit back, grab a cup of coffee, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lyndsay.
How are you?
I'm great. How about you?
I'm good, thank you. Did you have a good weekend?
Had a great weekend. Dropped a very dear friend off at an army base for basic training. So it was a big weekend for us.
Gosh.
Going away party. And
yes.
yeah, how was your weekend?
Oh, my weekend was busy. You can't hopefully see from home, but I'm quite covered in paint, as you know.
New house?
New house, so it's part of the uniform now, I think.
I love it.
I got all ready for the show today, and I thought, if people could just see that not 24 hours ago, I was in a baggy t-shirt with a hat and covered in paint.
Yeah, off hours.
Yeah,
that's right.
yeah, exactly. It's just, it's one thing after another, and the little home improvement projects, they really make or break you.
Yes.
And when I say make or break you, I think I'm talking about your spirit.
Oh, gosh.
It's like, you break something and you're like, rats, where's the landlord? Nope, I own that.
Oh, no. Never ends, I feel.
It really never ends, but quite fun indeed. So.
Awesome. Well, I'm glad you're in the new place and getting it all set up. That's fun.
Yeah, really fun. So let's just jump right into it. We had, some busy headline week.
Yes, last week was a little wild.
Yeah. Yes, it was. It was a little bit like the Wild West. I think we kind of talked about that when we first jumped into studio.
Right.
The news was on out there. We were kind of, trying to see if there was anything that we really needed to jump all over and talk about in here. Ultimately, it was a little bit of a fire drill for us.
It was. And the good news is the rest of the week did settle down. We seem to be running as normal again today. But we didn't want to just completely ignore everything that happened. So our first article does relate to last Monday.
Yes, absolutely. So I'll start with the headline. Japanese yen carry trade, a very popular trading strategy, just blew up in investors' faces. Mm-hmm. So in summary, the carry trade was in the headlines, like you said, last week, and it was kind of blamed for this potential global economic ruin. That's kind of where the fear was, and everybody was running scattered about and looking for information, really, and kind of a directive. This one admittedly was a hard article for me. It's not necessarily my area of expertise. So to summarize it in at least how I read it, first I had to kind of align myself. What is carry trade? We heard it so many times last week. It was not something that I was personally familiar with. So a carry trade is when you borrow money in a place where interest rates are low and you use it to invest elsewhere in an asset that generates some kind of a better return, right? Kind of seems like investing 101. I would think.
Well, leveraged investing 101. But
right, but that's where this kind of takes you into, or at least took me into learning like about the leverage and the high risk and stuff like that. So last week, the Bank of Japan raised interest rates for the second time since March, pushing the yen even higher, which thus makes it more expensive to pay back your yen-based loan.
Exactly.
Meanwhile, kind of in this, perfect storm, the dollar weakened because of the Federal Reserve strongly hinting that rate cuts were on the horizon, and then the U.S. tech stock declines. So basically, if you were a carry trader last week, you were running for the exit, but it seemed as though everybody else was, and that's where this got really, really messy.
And that's the problem with a strategy like this, is that when it unwinds, it really spirals. So I feel like we discuss things, we hear buzzwords like the carry trade, and there was so much blame for the carry trade last week. But what actually is it that's happening? So that's why we wanted to take it on in this article.
Yeah, so that's, I think, a really great place to start. So let's establish what a carry trade is. I kind of gave the rough definition.
Yes, you gave the quick summary.
Yeah, so in this situation, we're talking about the Japanese carry trade. This is based on the yen.
Exactly.
So talk to us about what's happening in this entire scenario and why this article is claiming that it blew up in investors' faces.
Exactly. Well, it kind of did. So again, as you very, I think, simply and eloquently laid out, there is a strategy here because Japan is at a very different point in the economic cycle and has been for some time than other major economies. They don't really follow, right? We talk about the US and Europe kind of in the same basket. Yes, there's a little difference in timing when we hit our peaks, when we hit our troughs, but at least in recent years, we have been trending very similarly. So we look at Japan, and their central bank has been holding interest rates near zero, extremely low interest rates for a very long time.
It's like free money.
It's essentially free money. It's free to borrow money. So it's easy to borrow in Japan, invest, even if you're just investing in US Treasuries. If you can borrow, I mean, Japan's target rate right now is 0.25%.
Wow.
And ours 5.5%. There's a difference to be made there. But that also makes some assumptions, the biggest of which is that the currencies will stay stable, and that doesn't always happen.
Okay, yeah, because there's a currency exchange whenever you go on like a vacation or something, you're looking up the current exchange rate.
How much does my dollar buy today?
Okay, so that kind of impacts your investment based on, the value of the dollar that you put in versus the value of the dollar that you'd be getting out. Is that fair to look at it like
If
that?
I am making this trade, and again, I'll just use US Treasuries as an example, but you could do this. The peso is a very popular carry trade. Stocks, clearly, either if you stay in Japanese stocks, then you remove that currency risk. But anywhere else, so you mentioned US tech stocks, that's a very popular one. Borrow against, a very low interest rate peso trade. I have to convert that money then from I misspoke, from yen. I have to convert that money that I borrowed from yen into dollars to invest that in US tech stocks. So I'm kind of the one taking on that currency risk there.
Okay.
So the carry trade has worked for a while, for many years, because we're at different points in the cycle. But now both of those central banks are kind of moving in the opposite direction. So Japan has just recently begun their rate raising cycle, and the U.S. Federal Reserve, they're on the cusp. We keep talking about will they, when will they, if they will. But that will be a rate cutting cycle. So things are moving back in a way that makes this strategy a little bit less viable.
Is this something that we've seen before? Because I feel like on the global stage, we're talking about interest rate increase, or we have been talking about interest rate increases all along. And now it's kind of like when we're talking week after week about interest rate cuts, we're talking globally. We look at all the other central banks that are doing it, and then it's always kind of like, we're going to leave Japan off of that list.
Exactly.
Now all eyes are on Japan because they're beginning to raise interest rates.
Right.
Is this a phenomenon that we've ever seen before with regards to carry trade?
Yes. I mean, in the past, there have been different strategies. Even today, you'd find different types of carry trades that could be, the word I want to use is arbitrage. It's not true arbitrage. There is risk there. But there are always trading strategies that come out as a popular mechanism. And again, certain assumptions are behind each one. When those assumptions no longer hold true, that's when we see things like strain in, whether it's in trading, certain banks, we've talked about, say, Silicon Valley Bank, they had a very specific trading strategy. And that didn't work at some point, and that's why that bank got into trouble. So there have been other examples of a similar kind of strategy ceasing to work. And when it does, everyone, as you said, running for the exit at the same time, that causes the losses to kind of spiral. Because if we are all, again, going back from dollars back into yen to pay back those yen loans that we've taken on, well, all of that demand for yen further drives up the cost of yen, which is the problem. We still have other people behind us in line, so to speak, then have to still get their yen.
Yeah. So what is at risk here, or what is there cause for panic in this scenario? Like, what should an investor be doing? I know that this isn't necessarily what we do, but how do you,
Yeah, so I won't give advice. I will say if someone is involved in the Japan carry trade, you see the yen went up, I think it's 13% in a month. Well, that's probably wiping out some gains. That probably would be cause for panic for that trader. But for the rest of the world, the panic that we saw last Monday, even by the next day, we had started to see recovery. And I think now I don't have the levels as of this morning, but we're really back on track. This was kind of a one-day blip. There was, yes, a big concern, but it was not the sky is falling as it seemed at first. So if we just can put some numbers to it to maybe make us feel a little better.
Yeah.
There's no defined carry trade, right? So we can't just say it's cost this amount, right? There's this much invested in it. Estimates are in the $350 billion range, give or take. I think that's a pretty good ballpark. U.S. stock market capitalization, that's $50 trillion. So less than 1% of the size of our stock market is involved in this Japanese carry trade.
Okay.
This is not going to take down the system.
All right. That's, I think, the big question here. Like, okay, so it might be risky for a trader, an individual trader, or, investors in general, but what, if any, impact is this going to have on you and I or the economy? Like, what is the takeaway here?
The big takeaway for me is that the stock market is not the economy.
Okay.
So all of the concerns on Monday, we said the Japanese carry trade is blowing up. Will there be a recession? And to me, those are two very different concepts. There's no mechanism, right? For this carry trade, for these, again, high-risk traders, this is a leveraged position. Anytime you introduce leverage, that does tend to increase the risk and the reward, but also the risk. So they should know that. They should know this is a risky position. We have been talking about the Bank of Japan raising rates and the Fed lowering rates for how many months now? I mean, none of this was a surprise, a news flash. Bank of Japan raised rates. What? This was well signaled. We knew this was coming. So a lot of the knock-on effects really were to have been expected. And furthermore, again, there's no mechanism for this to translate to job losses or GDP decline. There's no reason for this to flow through to fundamental, real economic outcomes.
Okay.
So I would say follow the headlines, but no reason to panic.
Right. So I think that that's always a good thing to kind of bring full circle here, because if I'm sitting there and I'm watching the news and I'm a business leader in today's economy, I believe, and in reading this article, even it evoked some fear, but a lot more questions even than just fear. I was like, what does this mean for me? What does this mean for my business? What does this mean for my people? And, I think you get kind of spiral thinking in those scenarios. So it's important to know how specific data points are they indicators, and what do they mean for my business?
At the end of the day, not very much.
Okay, in this scenario, in this case, not very much, unless you're involved in the carry trade. Okay, so all right. So not a big issue for the U.S. economy, but let's kind of steer the conversation back to the U.S. economy, which we know all eyes are on the economy, looking for that indicator. Is there recession on the horizon? Are we currently in a recession? All the indicators are busted. We've been going over these headlines for weeks, so I imagine when we're talking about the carry trade, people are like, does that mean, is that an indicator? Is that the new indicator?
Exactly.
So
there's always a new recession indicator.
There's always, we're always looking for someone to blame, not Japan in this scenario. That's all the time we have for today here on our free segment on YouTube. Remember to like and subscribe. And if you'd like to subscribe to full-length episodes, click on the link in the description below. Until next time, bye, Lauren.
Bye, Lyndsay.